We are not financial advisors, nor are we broker-dealers. Securities used in these videos are examples only. Investing comes with risk. Investing options also has risk. These demo accounts may be used, but they are for training purposes only. Testimonials may be offered. Don't expect the same thing. Remember, we're all here as peers helping peers. This is not professional advice. We're here to help each other. Enjoy.
Okay, we're going to move on now with two of my colleagues in Rocky Mountain Moneymakers, two of our probably most aggressive traders in Rocky Mountain Moneymakers. First, Mark Grizzly over here, Evie's husband. Mark was born in the United Kingdom, and he's lived in Colorado Springs since the year 2000. Of course, he's been married to Evie for 17 years now, and they trade together. Mark started with InvestTools in May of 2007. He completed the PhD program and all of the InvestTools courses. He's taken every one of them. And he mostly now, since June of 2010, he's been concentrating on swing trading, as Gary and myself have also with the group. Mark loves fundamentals, and he works part-time in Denver as an IT coordinator. Our other gentleman here, Gary Iden, another one of our teammates here with Rocky Mountain Moneymakers, has been trading with InvestTools since 2007. Gary trades swings, verticals, covered calls, and longs. He has his own business here, which is a courier service in Colorado Springs named Trip Savers. Gary's a scoutmaster. He has 3 kids, and he's teaching like mad his kids also, exposing them to trading. His 14-year-old son, is it Gary? Yeah, his 14-year-old son. So with all that, these guys are experts in their field, and I'm sure they'll be glad to talk to you as the day goes on if you want to. So let's give it up for Mark and Gary.
Oh, okay, yeah, we're experts, yeah. 3 years and I'm an expert. Don't think so. I think I was in IT for like over 30 years and I'm still thinking I'm not an expert. So I guess one of the things I just want to start out with, my favorite quote, it says, we are what we repeatedly do. Excellence then is not an act but a habit, and that's from Aristotle. I think what we're going to do about mastering investor psychology is, I think the last couple of days have really been great, and especially Pat's talk this morning, really about the psychology, and I think Gary and myself and I know Billy, etc., have really over the 2 or 3 years found that our home and where we're happiest is in swing trading, and I for one now know that that's what I am. I'm a swing trader. So when we talk through some of these things about investor psychology, we are going to kind of bias it a little bit to the practicalities of what we do within swing trading. So if you want to just click to the next one. So I guess this is a little bit busy. Wanted to just really say I focus really around the ones in red, which is my beliefs about the market, because I know people know about Van Tharp, you trade your beliefs. You're not what basically you don't trade the market, you trade your beliefs about the market. Trading systems, that matches my personality. I think all this 3 days we've heard from Evie, from Matt, we can't trade. When we first started with InvestTools, we kept saying, oh, give me a trading system, give me a trading system. I can trade that, I can trade that. You made money, of course I can make money on it. No, you can't. What we've learned over 3 years is that you might like something like Matt's in the money diagonal system, but then what you do is you adapt it to something that fits you. I found with trading with Evie that I cannot trade in the money diagonals. I am just somebody, if I'm in like 2 or 3 days, I'm starting to get into nervous. I need to be out in 2 or 3 days, and for those, I can say that the last week and a half I've been trading bearishly, and making money on it. So it's like, I know I'm also bullish, but when I start seeing double tops and start like that, I start drooling. So psychology of stocks we'll talk about. Gary's going to talk about a stock, Baidu. I'll talk about TLT. I like to look for certain patterns. I like looking for channels, horizontal or diagonal. And it talks about recognizing patterns, I think, as traders, and this, I think we were talking about intuition. Recognizing patterns, I think, we get to a point now, it's like scary. When I first started doing technical analysis, I'd be sitting there and saying, I couldn't see anything. Now, after 3 years, I'll just look at a chart and go, that's a nice channel. And I'll draw it, and I don't even need to draw it in, I know it's there. So, full-time or part-time, well, okay, here's the story of truth. I was working full-time, trying to trade part-time. I then went full-time. Didn't do very well, so I'm back to working full-time again and trading part-time. So, going through these cycles of trying to, what works and doesn't work. And then the tools that we have, I think Pat mentioned it, trading journals, I think, are really, really critical here to understand. I just loved what Pat said, and I have it in the end of my slides if we can get to it, really, is the fact that don't criticize yourself. Write down what's working for you. What are you doing good at? And then model that. Coaching, obviously. Cool coaches like Pat and Brett, etc. And accountability partners are awesome. And finally, community groups. Rocky Mountain Moneymakers, I guess we've kind of been very popular for doing some stuff within the Money Diagonals, but we focus mainly right now Tuesdays, Thursdays, and Sundays on swing trading. So, you want to take the next one down? So I thought this was extremely interesting. This was, you can see in the Think Money, this summer edition. Richard Dennis, who some of you know, the thing with Trading Places is all about these guys as to whether traders are born or whether you can actually be trained to be a trader. And I just love this thing about baby ducks. The first thing they see, they think it's their mum. Well, the first market experience Evie and I had was the 2007-2008 bear market. And it was a struggle to really see that, like Matt and Ken Fisher says, you have these beliefs, but then you just have to get the data, back test it, and say, well, no, that belief is wrong. I need to drop that belief and work on something that most of the time the markets are up, not down. And that's something that we've been able to, over time, to been able to release. Sorry, the next slide. So yesterday I was walking around my iPhone, and just looking at these, fear punches down 513, fear grips market, plunging market could make matters worse. Well, three years down the line, and I'm in like a drill zone. I'm waiting for that opportunity now with my system to start getting in. I think this is the thing, 3 years ago I'd have been reading this stuff, 3 years ago I'd have been panicking like crazy. Sabotaging my wife and saying, we've got to get out, we've got to get out, we've got to get out. But now after 3 years, I look at that and, I chuckle to myself because, I do have a bullish posture, but I am in the short term able to trade to the downside. But still from our longer term investing, understand that I believe next week, if market turns around, that there's some opportunities, to sell some puts. There's a lot of premium there. So if I get put the stock, I'm happy with that because I'm bullish. So, right. I just wanted to, I guess, quickly go through this. I think that, I know Bert's here, and, he's a great guy, had a very successful business and was able to turn around and basically with verticals, basically become, I guess, not have a job. And at the same time, talking to him, when Evie spoke to him and said, well, what's it like when you went, full-time trading and you had to make your money from trading and you didn't have that, other money there coming in? Well, there is a fear factor in that, it does. And for me personally, I experienced that, and it affected me negatively to the point where I wasn't able to make money, and I had to go back and get a contract. And now, I'm learning from that experience and now cycling through on what mistakes are made and what I need to be doing to get through that. And I think the next point is, we spoke about the 20% in options and 80% in investing. Well, I guess part of the people that are 20% were looking to maybe make that their full-time, make that, they can make their expenses with that. Well, again, you have to kind of like be realistic. I mean, if you have a $5,000 account and you need $5,000 in expenses, well, if you think you can make 100% a month, maybe, maybe not. So again, that's something for us as well. And not only that, sometimes, the market doesn't necessarily give you the money you want when you want it. It has other ideas. So, I guess if people have visited Las Vegas, they know it's there and they know they make a lot of money. There are certain systems and things that you can play out there that have maybe you have a higher probability or an edge throughout to better make money. I think if you're trading things like roulettes and stuff like that, obviously the house has the edge, and you're gambling. That's why they call it gambling. Anything, basically 50% or less is a gamble. So you have to find a system. So you can just, next slide. I love poker. I do play it, quite a bit. But it's a thing where it is, something where you can have some intelligence, and if you're good at it, there are professional poker players, and they do make a lot of money. So it's, I see swing trading like that. If I can have a system that has an edge and a positive expectancy, then I know that that's something where I'm not actually gambling anymore, that it is an expectancy, but it is something that over time will basically come out. 20, 30 trades, I could have 5 or 6 trades, losing trades in a row, but as long as I stick to my system, I know my expectancies will come out. So I guess with poker we play cards. So I think, I guess out of all of these, consistent and disciplined is something which I find to be something I've learned over the last 12 months with respect to swing trading. So if you could, next one. And I guess, people have spoken about this before. If the market is inconsistent and erratic, which it can be, then obviously I don't want to be inconsistent and erratic as well. I have to basically be consistent in what I do. So, with the Rocky Mountain Moneymakers, many of us went to the 4-day live, with Dave Johnson and with Scott Thompson, and they have some pretty good trading plans there. I think most people have adapted them to what works for them. Tweaked them in Rocky Mountain Moneymakers. We've reviewed them. We've tweaked them. We realized that unlike Matt and Dave Johnson, we can't watch 100 tickers. We're just not there. So I believe right now we're down to like about 20 that we watch regularly, maybe a bit less. So the consistency in the sense of the setups, I mean, if you're doing flags, the plan says it's a 1-to-day 5 pullback. So you keep on that until it no longer fits your setup. I think for me, I have to say unreservedly that my big psychological friend that helps me is this guy, is the conditional orders. In the sense that a couple of days ago when we had that, what I would call that really juicy hammer, I put in some conditional orders. But I put the orders in. What I've learned, I know what Gary's learned, is that we don't trade at market open because the bid-ask spreads are crazy. And if you fill up market, the market maker is going to be very happy. So you have to let the market settle down from that perspective. And as we saw on Monday, I mean, obviously the debt ceiling, etc., the market was up about, 1%, 1.5%, something like that. Well, I said to Evie on Sunday night, I said, yeah, that lasts about 20 seconds or 20 minutes. And so I don't ever put my bounce trades in until like 8 o'clock. I know Gary sometimes kind of extends that to 9 o'clock. It is what it is. People say, well, you're going to miss this, you're going to miss that, etc. I'm going, I don't care. I'm happy, and too many times have been burnt by trying to get in the open. So orders go in at 8 o'clock, and they're usually something like 20 cents or 50 cents, depending on what the price of the stock is. And I don't care if I get in or don't get out. I'm very comfortable now with all of I guess over the year now that I've been testing that system, I'm very happy with those rules. I guess with breakouts, I guess many of people have seen, how you have the horizontal resistance, and you see those huge, great shooting stars where they kind of like fake you in. Well, again, I've been burnt too many times with those. So, again, I always wait for the, almost like to the close, 1:20, 1:30 in the afternoon before again, psychologically, I'm not sitting, should I get in now? I mean, if you look at like a couple of days ago when it ended up, by the end of the day, it was actually a hammer. an hour into the day, it was a huge grey red candle. So if you started going bearish then, you were not very happy when the market closed.